There are a lot of people, especially in the real estate circles, that they are saying that hey, everything is back, like prices are going up, multiple offers are back, so everything is back booming once again. We'll have to wait and see how sustainable this is. But there are three other articles that show you guys kind of the other side, exactly what is going on. Households in other countries are paying down debt, but that's not the case in Canada. Canadian households are more in debt than those in any other G7 country. Like, that's crazy. And the amount they owe is now more than the value of the country's entire economy. So then they interviewed somebody from the chief economist from CMHC, and they are saying that Canada's economy is now more at risk to whatever crisis may arise because of how much debt Canadian households have racked up. Now, if you guys want to look at like how stuff relates to mortgages and houses, this is it right here. While many families manage to stay on top of their debt loads as long as their income levels stay the same, it becomes a problem for the entire economy when that suddenly and unexpectedly changes. That is like, obviously, I don't think that's like a hot take. That didn't really need to be said. Obviously, if somebody loses their job, they're going to have problems carrying the debt. We see early warning signs that more and more consumers are getting into financial difficulties. It becomes difficult, if not impossible, for mortgage holders to service their debt. So they are saying that three-quarters of Canadian household debt is tied to mortgages. Now, this is their solution. Like they are offering, like there are two options to deal with this: longer term or reestablishing housing affordability. Obviously, I don't think housing is going to become affordable anytime soon. So, what are the other options? Longer term. That has already started happening. So, the second article I want to share with you guys was this one here, relating to the banks helping out people. Canadian banks are extending amortizations over 35 years to avoid defaults. So, let's see what they have to say. Most of the big six reported at least a quarter of their portfolio had at least 30 years of payments remaining. Now, they say at least 30 years. They don't say, 40 or 50, whatever the number is, maybe it's 35, but at least 30 years remaining and more than 25%. BMO is at 32% of their portfolio having 30 years or more remaining. CIBC is at 30%, TD is at 29%, RBC is at 27%. Now, if you compare that number to last year this number was almost non-existent. Like TD was at only 0.3%, National Bank was at 1.3, Scotia Bank was at 1.4. Now, obviously, like if it helps somebody stay in their house and they don't get kicked out of the house because they can't make the payment, yes, of course, this is a good thing. I hate when agents say, well, you know what, like if those guys, the bank was not helping people, then they would have to sell the house. I think that is kind of disgusting to wish for somebody to lose their house just so you have something to sell and make that commission check. Honestly, it's disgusting. There's no other softer way of saying that, but I hear this all the time. Hey, you know what? Like, that's not fair that the bank shouldn't be helping out people. The sellers know that obviously the banks are not doing this as a good gesture, right? Like, obviously, everybody knows that the banks are going to make money, more money than ever before. But at least in the short term, if it's like a helping hand, it gets you out of a troubling situation time. Then yes, of course, it's better than losing your house. So, but it is like kicking the can down the road. But I would never blame a seller for taking this helping hand. It only makes sense. Now, the third article I want to share with you: Canadians are falling behind on debt. This is from RBC. So they are saying that while mortgage defaults might not be happening, and a lot of agents look at that as like an indicator, hey, the mortgage defaults are at all-time low. So what are you talking about? There's nothing going on. Well, one reason we all saw that the amortizations are just being extended. So obviously there are lower defaults. But there's more to like a household budget than just mortgages, right? Like a lot of people are falling behind on other things. Like this is from RBC. RBC wrote to investors this week to warn households are beginning to fall behind on credit payments. As the economy begins to slow, losses mount. The bank is forecasting things are going to get a lot worse in the next few years. Hogue warns that the mortgage delinquencies might be at record lows, but other segments are climbing. The mortgage delinquency rate was just at 0.15% in February, just off the record low hit last summer. But installment loans, credit cards, auto loans, basically every other segment of credit are seeing late payments arise. That isn't typical of an economy with a booming population showing economic growth and has unemployment just off a record low. Now, if you go down a little bit further, this is relating to unemployment. We recently highlighted that aggressive population growth isn't preventing GDP from slowing. RBC's forecast sees economy slowing even further, falling into recession later this year. They anticipate this will push unemployment from the current 5% to 6.6% at the beginning of next year. That works out to about 342,000 more unemployment Canadians in less than a year from now. So that is the scary side of what is going on. I know on the real estate side, everything looks like peachy, rosy, everything's booming once again. Hey, you got to buy a house before it goes up $200,000. You have to wonder if this is just a spring rush or just pent up demand from last year. So you have to take all that kind of stuff into consideration because I know some people in the real estate circles, they'll be like, hey, the mortgage defaults are at an all time low. Like, so what's the problem? Like, everything is fine. um, as I showed you guys before, Canadians are carrying more and more debt. In fact, it's the highest in all the G7 countries. The only reason mortgage defaults are at an all-time low is because people keep extending the mortgage. And like I said before, there's nothing wrong with that. It's better than losing the house, right? Like, sure, I would do the same. Like, obviously, in the long term, it's going to cost more, but hey, at least I get to keep the house. Now, the third one is there's more to the economy than just mortgages. Like if the mortgages are being paid, great, but people are falling behind on all the other kind of stuff. So keep all this stuff in mind and make of it what you will. I'm not an economist, I'm not a financial advisor, so I just want to put this out there and let me know down below what do you guys think. Is Canada back on the right track, like everything is booming once again, or is this just a bit of a mirage and things are kind of ugly at the back end? I'll see you next time. Thanks. Bye.